Good morning, everyone. This is Rose, April 11th, and 3 minutes after 9 a.m. Good morning, Rory. Good morning, everyone. All right, I believe the CPI just came out. Actually, I'm sorry, PPI. CPI was yesterday. Anytime the news ends with I, pay extra attention if you're new to futures trading. PPI and CPI is major news, financial. You have to pay extra attention to it. Good morning, Ted, and good morning, Nicholas, and Rob, and Pierre, and Good Things, and Ashley. All right, what do we have? Jobless claims came out. PPI final demand came out. What time is it now? It's 9:04. We do have 20-year bond auction at 11 a.m. And then we have, I'm sorry, that's not an auction. That's actually an announcement. We don't need to worry about that. It's the 30-year bond auction at 1 p.m. Eastern time. We have several different Fed members scheduled to speak today. So I'm sure they will talk about inflation, and the algos are listening. So just pay attention. I look at the econoday.com, the U.S. session. And then I also listen to Financial Juice, which is it's a paid service, but I use the free version. And it's very responsive. Fed Evans already talking at the moment. So if you guys want to listen to it in the background for timely reminders of upcoming news, that will be helpful. Anyway, so let's see. This is the PPI final demand. So far, 3 news bars. Generally, I wait around 15 minutes tops before I take any trades, if there's any news. After that, it should just calm down and give you a direction. Yesterday we said that we've been saying a couple of days, the market is in a trading range, and we have a double top and a neckline. And once the neckline is taken out, here's the neckline. Look for a pullback and sell off. That's basically a bear flag, forming another bear flag. But you have an IOI, and we said it's a breakout mode. The problem here is last I. So you have II, in fact, but this is an inside bar, and it's a very strong bull bar. Now, problem with this bull bar, if you wanted to buy above it, it would be dangerous due to your buying at the upper third of the strong bear bar. If this was a bull bar, I would have said, yeah, you should buy. In fact, you should buy underneath these bars. But it is a bear bar. Sellers at the upper third. And the inside bar has a very prominent upper wick that makes it difficult. And you can see that we got another doji. But it's a very weak doji. So even though we came down, buyers actually bought because they probably bought above this doji. They were probably up here and then bought again. And then, they really trailed the buy stop. And this is why I don't buy, because you're going to get trapped there. Problem with this is that it actually activated all of those buy orders, came down and closed high because everybody who bought here scared, bought again, and get a break even. And then the next day, we're down here. Now, I did say that we opened up here, and I said we're going to go up here yesterday. We're going to test, and sellers will be there. We actually bought in the morning, and we tested here, and then I said expect market to come down and test this outside bar's lows. They may or may not close a bear bar underneath. If they do close a bear bar, we could continue to go down, but we did not close a bear bar. We instead closed a bull doji. So market is right now 52.16. 52.16, we're going to open up around right here. If we continue to go higher, bulls will try to reach the midpoint of this outside bar. So market could reach 52.50, perhaps up here. There will be sellers waiting because anyone sold here might sell again. But if market starts to become bullish, okay, we have a wedge bull flag situation going on. What do? We will go there. They will try to sell probably twice. That's why this area is a sell zone. But if the midpoint holds, we could go right back up and test these highs. There will be sellers probably waiting there. So we're really, really stuck inside this outside bars range. And what about the bears? What if we just go up to here at the open and then make a lower high and come down? Remember, when you have, okay, double top, neckline, broken, that's a bear flag. Even though we can go up there, that could create another bear flag. We might get there, but either here or here, bears could be waiting and we could still come down from it. So we are stuck in this range, so probably sideways. And Brad has been saying that we are sideways and we will be sideways for a while, so hopefully you guys are paying attention to those. End of day recaps that he does, and then the blog posts that he posts daily, so you guys need to follow those if you want to get some kind of understanding what the next day can do in relations to the prior days. But anyway, so we're going to open up in here, and we're already going inside this area. If market, we get a bullish day today, it's due to the PPI. I'm still looking at these areas. Probably bears are waiting to sell from the midpoint and towards the high. Okay. Hourly chart here is last week's range, Monday, Tuesday, Wednesday. We've trapped the bears trying to sell because it's a trading range. And a trading range behavior, you do not want to sell that anything looks very bearish, or you don't want to buy anything looks very bullish at the tops. You will be rejected. So we rejected and trapped the bears, right? And now we are back up here. So if we start to get above this, there's a bit of a gap here, so we might need to close this gap. One thing that the bears fail to do after taking out this gap area here, okay? See what happened here? That's not a good takeout. I mean, that's not a good, bearish close. So that means because this bar did not close on its low, if it were to close bearish like that, we would have go up here and then sold several legs. Because we did not close this gap properly with this bear bar, bulls take over and go back up, but they also cannot close this bear gap. Now there's a bear gap here. Yes, they did close, but they did not take out that high. So what do? We end up coming down. So we have inner structures here, but not all that strong. So the market is trying to reverse back up. So what do they want to do? Most likely to close these gaps. So they're going to try to close these gaps, possibly. Okay. And this time bulls will try to take out that high. Now look left. There is a gap here. Bears are waiting here. So they're going to try to sell here. So we might actually make a double top and then start to sell again. So I'm eyeing this area. If the bulls come in strong today, we could get back up into this area. This gap area is my area that I'm more interested. But I'm also paying attention what the bears are going to do around here. Okay, one thing that's happening on a higher time frame is the 20 EMA actually moved below 50 EMA. One thing that has not yet happened is the golden cross. What is a golden cross that you might have heard? It really is the 50 EMA, okay, crossing above and below 200 EMA. All right, we have been bullish. I don't have enough, but imagine this right here. We crossed, and then bears were still probably selling. They sell at the high. and then make money and then exit out, because this is now bullish. So you do not sell these kind of sell-off. This is a deep pullback for bulls to buy again, and the market will stay bullish. You can actually buy every deep pullback. Now, will the market do the 50 EMA, 200 EMA crossover, golden cross? If that cross happens, okay, gonna get a deep pullback and sell. Gonna get a deep pullback and sell. Market could be distributing, okay, and starts to get very bearish. But in order for that to happen, we're getting some kind of an initial sign with 20 EMA already crossing. Look what just happened there. Deep pullbacks and they're selling. Deep pullbacks and they're selling, but we don't have good bear closes, right? So we might actually go up and then sell from there. And if the market drags these moving averages underneath the 200 EMA, we could end up getting more bearish hourly bars. So it is right now, because they're all bunched up, it's a sideways market. So it could be sideways and up. So this area, I'm going to look to see what will happen. If the bulls show up and they decide to go higher, obviously everything's going to go flat. This area, I'm going to look for strong bull closes and I'm going to sell them, because you're in a trading range. When the moving averages are flat and going parallel to one another, I don't care if you're on a higher time frame or a smaller time frame, you want to bet against the bulls, and then underneath you want to bet against the bears. So that's what I'm going to be looking for. We're still sideways, but possibly this area bears waiting, this area bears waiting, and let's see how the market handles it. Globex session is strong. Bear bar right here, and we went into sideways market and a trap of the bears right here because it's a trading range. It's also 1, 2, and 3 wedge bottom. Okay. Or you could say 1, 2, 3 wedge bottom. So you got kind of nested wedges there, and the market reversed back up. But problem with this is that we're testing the top of the trading range. So this could be a leg in a trading range. This is not a higher high. Now they're trying to get a major trend reversal here. Problem here is that this is an ATR bar. If you measure its range, exclude the wicks, 50% is where the bulls want to test. We might even go to the 66%, but this area, okay, 66 to 50, sellers waiting. We might actually, what did I do there? We might actually make a double top somewhere in there. And sorry, the Pointcaster's application and the drawing tool and the mouse all just interfere. So is this area, imagine, let me find that area actually, instead of trying to draw it. Okay, that's actually a mother bar too, but I'm gonna be looking at this area. This. So we might actually pull up there, but then I'm gonna be looking for a bull trap setup. See if I can actually trap those bulls and then reverse it back down. This is actually a bear flag, but the problem here is, we need some good signal bars here. Nothing to sell here just yet. It could be a pullback and it could keep going higher, but that's where I'm going to be looking for some kind of a trap and sell. Okay, let's see what happens. If we demolish this, the market is going to go into this breakout test area, 52, 57, 52, 58 area. Okay, but I'm more interested in this right here. Okay. Yesterday, I want to look at this here. This is my ETH 60-minute chart, and this is my swing chart. So I have the 20 EMA and the 200 EMA. Market is bearish. It has been bearish. when it's 20 EMA is below higher EMA, you should look to sell, not look to buy. So the 200 EMA is going to act as resistance. Think of it as a trend line. But I have an area that's fair price. The market has been doing something significant. So I expected this area, that black line, to be basically a major resistance. If it were to get above it, then we would have gone up, but we never did that. So I found some bear targets. We have taken out this target for the second time. If we can find some bears here, there might be an area. Where are we now? 52.20. So we are already in here. Testing is we could actually come down. Okay, sorry, this is ETH, I forgot. So we're already here. If the bears do show up, it could be a double top, and then we could get some bear bars. This would be my target right here for bears. Now, I don't know, but if we demolish this, then we're gonna go right back to the 200 EMA. This time we can actually break, and there was a trend line. I'm going to try to find a similar trend line. It doesn't matter. No, I'm not very excited about that one, but so if the bulls do show up, that could be the 30-year bond auction could be a catalyst, could get us up to here. And then if we break above it, that trend line is going to be my target. Okay. I could also do my best here, but either or. So I'll leave that trend line. Impulse, pullback, impulse. That's not a pullback. So it's a trading range, basically. Trading range lows, and bulls really need to take out this this area. Failure, this area could act as resistance. If we cannot get above it, then I'm going to look for this trend line to be broken and market to continue to come down. But if we take out this right here, okay, we're going to find ourselves right up here. All right, yesterday we started as gap down, and the first bar is not all that great to say that this is going to turn into a sell to close trend from the open. You get 2 bars, 2 dojis at the open. Bears trying to take out the bar 1 low, but every time they tried, they failed. They tried several times selling, failed. So once I see a strong bar like 4 failing to close that bar body below bar 1 low, I know that it's a failure, and it's the second failure, in fact. Failure, so it's a swing setup, and the bulls show up. And we ended up buying, if you remember it, and I actually said we were probably going to test the 69 lows. And we did, and we got a rejection. I was looking for a little bit further up, but we didn't get the second bull bar closing above the EMA to say that we have turned always in long. But the one thing that's happening here is this, right? It's kind of signaling me that market is going to go sideways. There's indecision here. Is anyone sold stock? And they're looking for a key price level or some kind of a resistance, right, to sell again. So you have some kind of a trend here, but it doesn't matter how strong the trend is at the open. You're going to get some kind of a reversal about 90 minutes into the session, and that's what you got there. So market comes down, is 2-bar reversal. You can, if you're worried selling that, this channel is not all that great, okay, for bulls. You need to sell underneath 15 or wait for a second bar 16 and then sell. Where do you sell into? Well, I said the first target is going to be 11 lows, and then we're probably going to get the 7 low. Market tests the 7 low, bounces a little bit, comes down. You have a much stronger bear channel here. Chances are sellers waiting. Okay, so they did get another leg. We still haven't really closed and take out that low. And why did I pay? So it's very important that you need to understand something big is being rejected right here. That's the first sign of trading range, right? That's what I look for. So I don't expect right away market to take out the 4 low, but I know bears trying to get to the 4 close or 4 low. They need to make money, but it's not going to be easy if you're selling at this low, that lower trading range. You're not going to go far. It's better to buy the pullbacks. Better to buy the pullbacks towards the EMA. You don't buy. Okay, so this is probably going to be minor pullback, and the bears are going to show up. Bar 25 close on its midpoint, but it's not all that great. It's probably some buyers, maybe underneath 25 or 23 or even 24. They're stuck up here. But second bear bar, that's momentum, taking out the wick 25. Market is actually looking to go further down. So the target is still there. But the problem here is I said this whole area is a buy zone at the same time. Bears make spike pullback channel. So the target now for bulls is to get back to the bar 24. We get back to the bar 24. First time and second time, they sell. Now we finally got there, and the bears made money. But because this is a trading range prolonged so long, 40 bars plus, what do you think is going to happen at the lows? Do you think it's going to break out right away? No, it's going to reverse right back up. It's a strong trading range. It reverses back to the 50% of the trading range, right? So there is a gap here. You cannot expect market to go higher. First, these gaps will try to stop the bulls, and it did. So you have a leg in a trading range in a way. And is anybody who bought it, and also notice why it would fail. 5-minute EMA, 20 bar EMA is below the 1 hour 20 bar EMA. So it is a bearish, right? So you should be looking to sell, not looking to buy. Even if it's a strong leg, they're probably going to stop you. So and it's also bar 48. What happens at bar 48? That's 130. That's a midday reversal. And they got a midday reversal, but you're selling into also big down, big up confusion. So there are buyers here. And you can see bar 51 is a bad follow through and a really good buy signal bar. Inside bar 52 and inside bar doesn't have a prominent upper wick, so buy orders will pile up above that bar 52. And where's your target? Stop here, 1R, 2R, or the prior highs, whichever comes first, okay? And so on, so it just continues, right? Continues to go sideways, and it was tough yesterday. Let me tell you something. I actually gave back some of my P&L in this area. I was doing so great, and I started over trading, and I had to stop. And I said, that's not good. I gotta reserve the P&L. I made really good, but now the reason why I gave back some of my P&L yesterday is I was tired, I was rushing the trades, and my lot sizes were big. So I wasn't really doing good trade management, risk management, to be honest. And it kept eating away. I was making money, and then I would take profit, and it would just eat away my profit. And then I would revenge trades. This is where I stopped. I'm done. I can't do this. This is obviously a strong trading range. Gotta reserve the capital. Gotta reserve the money I made already, and just walk away. And that was it. So we all do it. We all overtrade. It's just a matter of sobering up and not do it. Okay, so you got to stop somewhere. And yesterday, that was my lesson right there. Anywho, today is a new day. Market closed near the EMA. One thing I am missing on this chart is yesterday's high, yesterday's low. So I'm going to add those before market open. All right, market is open, and here is yesterday's low. Yeah, I was not conservative at all, Arturo. I mean, I don't know what was wrong with me. I've been feeling some anxiety lately, and they put me on pills. So not the anxiety pills, but it's giving me fast heart rate. And having this for some time now, since last year, and they're trying to figure out what it is. Suddenly, I have high blood pressure. I think it's just certain age you develop these things. So I noticed that this medication is making me bolder. I had to adjust it. I've been taking it for 8 weeks now, and I actually talked to the doctor about it, the cardiologist. I said, I mean, why I'm a trader, and so, oh, this is why you have high high blood pressure and high rate of heartbeat. Well, I don't know about that, but it could be I don't know. But I always been a anxious person because I like to check things off the list. I'm not a type A. I can be super lazy, but I don't like it when things are not done and they're not done my way. And one of the reasons in the corporate America, I always pulled into an HR room with a bunch of HR people, always reminding me not to micromanage people. I love micromanaging people. And they kept giving me these people to manage, but I kept warning them, I'm a micromanager and I will manage you. And you'll probably learn very quickly working with me, but I will annoy the hell out of you. And this is part of my personality. My mother is this way. So and I had to tell the cardiologist, this is the way I am. So we're trying to figure out, but on this department, this pill is not helping me at all. Now I'm going to go down the history of the pill popper. But, and I noticed that I have to be a lot more calm and watch what I'm doing, because yesterday I was really increasing the sizes and I had to stop, like go for a walk, come back. I came back and I said, I'm not trading. I don't care. I actually missed this trade, and I missed that trade. I knew it was going to happen, but done, not taking it, just preserve everything. Tomorrow is a new day. So okay, so if you actually divide the channel into, I'm going to use these extremes. You don't have to, but let's do that. Divide it into 3 stacked trading ranges. So we're at the upward third. What is upward third? It's a sell zone. We are still below the higher time frame moving average. Slightly is more bearish setup than bullish. So but we don't have a bull bar. But if you do buy here, okay, probably even if we go higher, there will be probably bears waiting to trap. But look how many times they have sold yesterday in this area in the afternoon. 1, 2, 3, 4. Are we due for a breakout? Probably we are. So if we do breakout, where can be sellers probably above the magnet. So we could get a double top there if we do get there. Okay. This is close of yesterday. These are midpoints. I think I'm going to make close of yesterday a gray color because it's kind of, there's a small is breakout test area. So we've tested it, but didn't close a strong bear bar. But also, bulls really didn't buy to close yet. They ended up selling, so I don't know how strong this area it can hold. We might actually come in to the midpoint of the lower trading range, which is right there. That's where the bears want to take the market down to. But they have to fill bar one's lower wick with a bear body to continue to sell. So if we close below that boundary line, market is going to test right here, this line. See, there's momentum there. You can see it. So the bear's still trying to get down to this area, but they have to close it bearish. It is overlapping two bars. What happens if the bar 2 does not close bearish? They will trap the bears selling because bulls want to get up here. Okay, it's been selling in this area for some time. Great way to trap the bears, so be careful there. You're in a scalp mode here, but if the bar closes bearish, taking out the bar 1 low with a bear body, you will get follow through testing of this line and the EMA. This is not a trend line. Let me see if I can, yeah, get rid of this. Take a look at the news again. Nothing really. Bunch of announcements, is bill announcements, but they are announcements. We're about to test a key area on the Globex session is Asia high and US midnight open. Could act as support, but if we break below it, we're going to come down and test the round number 5200, which has been an area of interest for some time. And that is right around here. That means we could actually move underneath these two lines. Okay, is that one is and here, and test the boundary line, and we could bounce there. But first, this is the target, like I said, and we're about to test it. Two bear bars at the open, but within a trading range. One of them closing on its low. It's a good thing for bears, but you're in a trading range, and we're at the 50%. Okay, so tested that. Market is trying to close the gap. What do we need to do here? Look at here. This is where bears failed. Notice, you see this gap bar? They had an attempt to close that gap, but where is the bear body? Yeah, it's there, but is this good enough? No, there was another gap here. So anybody who sold higher at the midpoint of this area, hence the line, they're making money now, right? They probably sold underneath, sold this bar close, and they brought it down as much as possible, but how do we reverse back up? Well, if they fail to actually take out this low and close a strong bear bar, we could reverse right back up now. So this then becomes a break-even event for bears who might have sold here, sold the close of this, and brought the market as low as possible. That's, you would know that we could reverse. That's it. And they give up. So they tried once, they tried twice, they fixed, and if they finally exit out of the market, then we get the bull bars taking market up to the magnet, which is here. Bit of a support here, the key level, but we close a bear bar, we will continue to come down possibly. The buyers are in this area because look, break again, so resistance became support, could act as support, and that's what it's trying to do. Market is always looking for some kind of a support and resistance at the open. It already found resistance. Now it's looking for support. We could go up to, if bulls do show up, we could go up to 15 area, 52.15, but if they take out this gap and close a bear bar, they could continue to sell. It's also a double top, possibly. Bears looking for a double top. Bear flag here is situation, double top. But I am watching with intent what the bears are going to do here. Are they going to fail to close it and become more bearish and take these lows? Or are we going to just reverse back up suddenly? Bears kind of failed there, but they might try again. But it is leg 1, pull back, leg 2, pull back, already leg 3 with first 3 bars. How do I count that? I pay attention to the wicks. Look, market came down, closed up. That's a pullback. Market came down, went up. That's a leg 2 and pullback, and that's leg 3. And that's why bar 4 is bouncing at a key price level. Nobody wants to sell the close of bar 3, so you're getting this bull bar. What time is the US midnight open? Should we have fun with this question? I know, it's my midnight. I'm just kidding. But you know, sometimes you just have to like think twice when you ask the question. Answer is right there. 3 guesses. Midnight, midnight, midnight. It's the midnight, 24 EST, 2400 military time. Sorry. Okay, so what are the reasons that we went up? So we talked about the first reason why we went up, because I'm counting 3 legs. What is the second reason why is bar 4 went up and now is trying to close bearish? I actually talked about it. I don't know if you guys paid any attention. Why did the bar 4 went up and tested is near bar 1 low? Anyone's gonna answer this question? Can anyone answer me that question? Anyone who answers the question will get, I couldn't even say it. No, I'm getting answers. Yes, breakout test. Thank you. So but that's not the answer. It was a breakout test, failed, so there were buyers there, right? They bought, hope that this would go up. So when they fail, what are they going to do? They're going to buy. They're going to buy at the EMA, right? And they're going to try to break even, right? So that's what they did. That's why that bar went up so fast. And that was a legit area because it was a micro 3 legs down. So, and it's also the key level, which is EMA. Good place to buy and fix and exit before market continues to come down. So thank you. Everybody paid attention. So when you start to see these things and the reasoning behind why bars are opening, closing, why they're going up or down certain amount, not able to continue, it's just the ongoing story of price action. Once you start to read that correctly, you become a trader. You can trade any bar. I think many traders who get good results in the beginning not get any follow through or consistent trading in their life. It's just, or in their trading journey, it's just that because they don't understand any of this, they don't see it clearly, and because they can't read that psychology. And when they cannot read it, that means they haven't taken the course, they haven't watched L. Brooks, or they have not spent any time really truly understand what's going on there. and therefore they just get inconsistent results. But once you start that, you can filter out your trades and take good trades. So we now have another also breakout test right there. So it is resistance also, but it became resistance because many bulls did exit there. They took the break even, but look how many times the bears try to sell. One time, failed, might try to sell again, second time. We don't have that yet. So if the M2S, the moving average's second sell fails, then I'm going to look to buy, but I'm not going to buy anything here. So bears want to take out the bar 4 low. Bears see this as a triangle bear flag. So they put a sell stop order underneath. They're looking to get filled and come down and test here, possibly. Bulls want to trap those bears trying to sell is here. So because there's a gap here, they want to keep this gap open and go back and test the bar 1 high. So what do you do here? There's no second sell set up yet. Can you sell? Well, if you did, right, you put a sell stop order. Did you get filled? If this bar closes bullish and takes out that high, what are you going to do? You're going to cancel that order. So right now is stop order bears are still waiting underneath 4. I sound like I'm contradicting myself, but I am not. I am looking at both sides of the markets and trying to decide who is going to win, because there are sell orders and there are buy orders, there are sellers, there are buyers in the market. They're all doing something. You might be taking a sell order there, somebody's already bought and making money. So, but who wins determines the continuation in the direction, okay, whichever the market picks to go. So you have to always weigh in buyers and sellers together to make sense. You cannot be one all the time because market changes direction all the time. That's why trading is very tiring business. I mean, I pass out. I have to take a nap, even if it's like a cat nap, after the bell. And then I get up, I make coffee, and I retrade the entire day on a speed up replay. And then I go make dinner and relax the rest of the evening. But it's just, I have to relax, and it's because you're using your brain to the highest capacity that you probably never used before. So it's a very tiring, challenging, because you're trying to read the story, make up the story, understand what's going on. It's very difficult. Therefore, I'm not saying it for myself, but I look at every trader or trader want to be is a very high IQ people, intelligent people. Stupid people cannot be traders. They will lose. Okay, so every one of you is very smart. It's just if you're not profitable, it's just a matter of time that you're going to turn that corner. So just keep going at it. Don't give up. Yes, you are. You're smart. You're here. You show up. You signed up. So you are smart. You are an engineer, and you're an earthquake engineer. So anybody, my father is an engineer, and anyone who can actually build safe buildings for the safety of humans, you're doing great service to the humanity. Any engineer is a very smart. Engineers make great traders, by the way. Well, there's that. Well, but there's a reason why Forrest Gump could be a great trader, because I don't know what Forrest Gump would do here. I think this is where he would just throw up his hands and go for a shrimp hunting. Okay, what do they call that down south? Shrimping? I don't know. But really, Forrest Gump actually shines here, right? Shines there, right? Shines here. Maybe even here. But this is not a place for Forrest Gump. It's a double bottom, possibly a bull flag on wherever you can see patterns, that trade that chart. So here is your 15-minute chart, right? And that's a double bottom is at the EMA, therefore it's a flag. But there's a gap here. Did we actually trap the bears? We ran some stops above here, but we didn't really trap anybody. So what the bulls want, they want to close this gap, okay? And if we get a bull bar right there, they will buy that, put a stop here. They're going to go 1 hour, 2 hour. But you have to see that bull bar first. Otherwise, the bears can actually sell in that area as well. And that hasn't yet set up. And look what happened here is that's the second entry kind of long from the EMA. Or you could say, no, that's the first entry. What is this combo right here? Why did the bulls bought the close of bar 5? Because they saw but it didn't really set up all right. It would have been better if bar 5 went underneath, one tick underneath bar 4. This is why I didn't buy the close of this bar, nor I put a buy order, because it has a potential of being a trap. If it were to set up like this, you got the bear bar, right? You got the bull bar. If you had market come down, take out that low, then closed a bull bar, I would have bought that with my eye closed. I would have even put a buy stop order above that bar 5 wick. But a couple of things happening there that anybody who's buying here is going to be a bait, okay, fish bait. So why? 5 didn't go under. They're already buying. This becomes a double top bear flag here, okay? So instead, bears know that, and they're selling against, because anybody who bought it, they put their stop either there or maybe down here. I don't know, maybe even underneath 5. So they want to run those stops, right? So these are the things. Pay attention. So I've done nothing there. Now, bulls are stuck is they probably entered above 5, close of 5. They're buying at the low of 5. They're fixing the trade. They're hoping that their other bulls will come in and close this bar bullish. If the bar closes bullish, then that's great, but it has to close a bull bar all the way up here to eliminate this double top bear flag. Then I'd be interested in buying, but they have to show me. That means 3 bull bars by the close, especially if the bar 6 closes up here like this with a bull body. That's a momentum. Could go and test these highs, maybe even bar 1 high. The open of the day is then we might even get a breakout to the 1 hour EMA. Until I see that, I'm not going to touch it. Okay, is because this bar 6 could be a fixed event. Now, if the bulls close out the third bull bar, that'll be great for them, especially taking out that double top 3. Then they're gonna be able to close bar 6 on its side. Then I'd be interested. Fed Barkin is speaking at the moment, so I'm waiting for the bar to close. If they want me to buy it right now and close this small gap here with the 1 wick and the 2 bodies, they have to close this bar bullish. If they fail to close it bullish, that'll be a double top bear flag and a second entry short for bears at the EMA. I don't use always stop orders. I do use, if I'm really looking to get in a trading range environment, I am not going to use stop orders. It's a limit order market. Stop orders can fail. But market orders I do use if I'm late, I'm not able to move the stop order on time. I just hit buy market or sell market. See, I didn't rush it. I didn't buy it. Where's the third bar? So I ended up selling and got in. Took some profit. Now I have a runner into this close of yesterday or the boundary line. So what did I do there? I filtered the trade. How do I know all of this? Right. First of all, it's a strong second bear bar. Right. So second bear bar closed on its low, wants the second leg down. And we all knew market was going to try to get there, but I entertained the idea of bulls maybe trapping, but there was no trap there. If bar 5 to go one tick below bar 4 and then close the bull bar, everyone would have bought that. Early buyers, anxious buyers bought that and paid for it. But they bought again and got a break even, and I said this bar 6 is going to be a break even event most likely if it closes bearish, and it did. So I sold underneath that bar 6, and now I actually scalp right there. It could continue to come down more, but there is support here. So watch out. This whole area is support. Don't like that color. If bar 5 is not 3, bar 5 low, took out the bar 4 low, and then closed bullish, I would have bought that. Let me see if I can show you some samples that I've collected. I call the limit order buy and sell. So if you want to take a quick screenshot of this, that's not it, is starting from here. So take a screenshot of this explanation. A ton of examples, like is here. You see that right there? And a close bullish, I buy that and I target the prior highs. Here is another example, right? Limit buyers, bulls buying. You go the upper third, since there's a breakout, upper third of this bear bar or breakout test area, there's a good scalp or at the EMA. So there's always a trade. It's just that you have to see it. Look, here is a problem. Okay, we went below this bar, but it's a bear close. I probably would not have bought that. So what I do is I'm looking for a bull bar, right? Comes back down again. I put a buy stop order right there above this bar and keep trailing until I enter. Stop underneath. And I eventually make money, but it's a really tough one. Why? Because it didn't set up the way it's supposed to set up. This should have been a bull bar. But bulls compensated, so they're telling me they want higher prices. But it's not working. Even here, it didn't work out the way it's supposed to. This is a bear bar, should have been a bull bar. So they're trailing buy stop orders above this bull bar, is knowing that the bulls are trying to compensate and looking for still more. But we're going sideways and up instead of up and up. So it didn't really turn into a stop order market, but it turned into a limit order, but it's just going sideways and up. You can still tell. So here is another problem. This should have been a bull bar, but then you got this bar, so I'm going to buy it. I have room to make money, most likely. Okay, so, but when does it go buy the close and become a good swing? When it actually tests that and then closes a bull bar, then you could just buy above it or buy the close and target these areas, maybe even higher. Is you take profit there and then you leave a runner. And here is for bears, right? This one went above, closed, perfect bar. Either sell the close, sell market, sell under. That's going to come down hard. Here's another one. So and so. Okay. All right. Lesson over. Class over. Class dismissed. I love those setups actually on a higher time frame. I mean, signal bar, you want a good body, right? Body tells you how strong the selling or buying is. So signal bar could be a signal, but doesn't mean it's going to trigger. If it's a lousy close, the result it will be lousy, and no one is going to want to entertain to getting with that, right? You're trying to convince the buyers and sellers sitting on the sidelines to join the markets. If your offering is not all that convincing, great, no one's going to bite it. So that's why the bar closes are important. All right, we're in the supports, and we broke its important area. This is going to bounce a little because we're testing a breakout test area. It's going to bounce, but there could be sellers right there. I don't know. So what happened to these bull flag? Failed. Look at the bar. It's not a good inside bar. Is not a good bull bar. And you saw that bull bar is actually this right here. So you see this right there? It's not a good buy signal bar. It's got a very prominent upper wick. If one thing, there will be probably sellers. That's a pullback in a second leg. And you saw the result, right? Nothing triggered. Ended up trapping everybody, and they sold. So we're in a buy zone here, but we don't have a buy signal. Could be a bounce. This whole area is actually a support. We could come down a little bit more. Let's see if we can bounce here. I'm looking for a bull bar. If we fail, then we continue to come down. If there's no bull bar, I'm not going to entertain buying. Market is probably trying to come down more, trying to close this gap, but strong bull bar, probably buyers somewhere down there waiting. There's that. Bar 1 is a bad buy signal bar, but it's everybody who bought it already fixed and probably exited. But if they're still holding, then they're looking for some good buy signal bar, and they will wait until we might end up testing these lows before getting something decent. So market is slightly becoming more bearish, but trading range. And look what happened on the daily. So you see this limit sell area. We tested it, no bull bar. Where do you think they're going? They're trying to take out this low. This is the next target, but really this is the target. So this is where they're trying to test and break and continue to sell and maybe bounce there. Market could continue to sell more today. But then again, this is a daily bar, so we're probably come in here. We might bounce back. I don't know. It's just a one bar. So when on the daily, I'm looking for follow through into this area, this right here. We could extend and even come down to here. Fed Williams talking. They're talking about U.S. house prices to go down like 50%, lose value. I mean, that would be wonderful, right? It's not like no one can touch the market. The houses are so expensive. That's like whatever happens to the American dream, right? It's buying a land, buying a house. If you cannot fulfill your dream, why would you live in this country? Feds know that. And you cannot buy a house. Your salary doesn't help. So that means your job is not paying you well. It makes the other countries more enticing to move out of the United States, and nobody wants that. American government don't want that. They want people to come in and pay their taxes. So every country operates that way. So they have to do something about the housing markets. And if you cannot live your American dream, what purpose? Why would you live here? So hopefully they're talking about the housing market cooling, but it needs to cool faster. All right, we're still at the support. We haven't really found good buyers here. Bears still trying to break because on the higher time frame, they want to get to that golden line and also this right here. And they can extend the selling here. So what do we have here in the inner? Because this is support, is there could be some buyers. I don't know what else is there and I don't care. But there's also, where else can this go? So here's a measured move target. The market is trying to reach 84. I took more profit in this area is because it's a strong support, although I don't know how strong it is, but look what happened here. There are buy orders here, so I took profit. If they close a bear bar in 15 seconds, they will get follow through. Trying to be more conservative compared to yesterday with my trade, so I'm taking faster profits at the support levels or resistant levels. ATR is 7, so that means pretty fast market. ATR is 7, so that means pretty fast market. Market is trying to make its way down to 51.84 still. I do use chart trader. I also use this. Okay, here's the target. Right. I use these buttons a lot. You can also you can use ATR. Like for example, do custom. Right. Here is an ATR. Say you want to get in with 4 contracts, and then here is maybe you want to scalp with 3 contracts. Your stop, whatever the ATR is 8 right now. I can't afford no more than 5, so 5 times 4 is 20. 20 ticks, and profits that you want to take out 5 ticks. Maybe you want to do a quick scalp, right? And then the next one you can do 20 is, and then you just do, I don't know, 20 ticks, or do like 21. So, and then save this as a 4 is, let's see, trade room 4C. Okay, so I'm not automatically trailing anything, right? And so I have that. This is sim, right? So you have a breakout here. Would you sell here? Well, they did break this, and it's still going down because we know where it's going down. But if you sell right now, there's not much of a space here. It could actually reverse back, right? So you got to be careful here. Is if you do sell, but market wants to continue down, it just needs to pull back a little bit. Maybe they turn the support into resistance, maybe test around here and then sell again. Market there's a head and shoulders pattern here. Left, head and right, neckline broken, measured move to downside. But there could be buyers here. So it's pulling back, probably looking for sellers somewhere up here. It's a trading range. Any breakout fails also. This is kind of a flag here, pause and leg down. So it needs to, it could trap you. But if they do close a bear bar, then you don't really need this anymore. Then you know where it's trying to go. It could still come down to 51.80, which came so very close, but didn't really tag. This whole area is actually a trap area, so we could bounce from here, go back and test this area and sell again. I think this is still 5180 is still target. You can also use right click and use the chart trader. Some bears are taking profit. They know this is the low of the trading range, so breakouts can fail. But there are probably sellers up here around, let's see if there are any sellers around 5188 area, 88, 89. If we breach that area with a strong bull close, then they're going to observe all of those limit sell orders because it's at the bottom of a trading range. But the sell limit orders are up around bar 9 low. So this whole area, you got sell order and sell order, probably sell order. As it goes up and comes down, they're going to make money. But if they don't see a bear bar closing, they will exit out because it can go up. See, it's already breaching this area. I didn't sell because you're selling too low. It needs to pull back. But probably sellers above bar 10. Bears are not happy. They probably sold this breakout and trapped, so they're going to sell higher. So what you do is you can you could do this none, right? So you can put, this is simp, don't follow. Put a sell order there. The upper third they already sold. See, I'm too late. You should have laced this area and upper third maybe a little bit lower with sell orders. But let's see if they can actually come up there and fill. But there's a chance of this going all the way up into the bar 80 low. Okay, so I'm going to put a sell order there. Okay, I'm going to put a sell order there. Okay. So anybody who sold on the upper third of bar 10 already making money. Okay, they're scalping. But if this bar closes bullish, there will be, see, I could be doing the wrong thing here. I'm just demonstrating. Okay, I could get a quick scalp there, but the bar closes very bullish inside bar with a very small wick. There will be buyers looking to buy because you have a fake breakout and the market could want to reverse back up. It could even go right up to bar 7. I am demonstrating it could lose. Do not follow this trade. I'm not using ATM. I'm using manual. So I sometimes do this, leave the orders away. And if I get filled and I just put it right there and I get a scalp with that first fill. It's kind of difficult to do that when the market is moving too fast, okay? So we're trying to close it as high as possible so the bears would exit out of that because that's a leg 1 pullback. That's a leg 2. I don't know if this is a pullback or this is the pullback and we're going to get another third leg down. But if it closes like this, many bulls will buy above it rather than sell it. See, that is a very small wick. Some bulls will start to buy, but bears waiting at these levels, maybe even higher. I'm demonstrating a quick scalp. I'm not recommending you to take the trade. In fact, I don't like to do this because I'm missing out on a trade here. So this is the way that I use, or you can use, you could set these up as ATM and it would automatically place your stop, and you could just move the stop if you like. I could also buy and scalp, okay? Why? Because this is now turning into a break even. Bear selling, probably somewhere in the middle, they already break even. So I could buy this and probably scalp up there. But it's a bearish market. I want to see how this bar is going to close. Bears want to bring it down to here. So I'm late. I'm already late with this trade. Normally, I would have sold at the upper third of this bar 10 and would have already made money. Okay, because this is a potential of going up. Bears sold, stuck, selling. They want continuation down. You see how I'm late? They want to 51.80. I'm going to cancel this out. Get back to trading so you got the idea. So 51.80 is still target. Bears want continuation, but they have to close the bear body, take out the bar 10, close. What happens if they cannot take out the bar 10, close, and we close a bull bar? Then I will buy, but I'm not interested right now. This is still trying to make its way down. If the bears cannot get to the close of 10, then I will say this is it, this is the best they can do, and the bulls will show up. But I already missed this trade. It never came further up, so they sold the upper third. So this is now a triangle, could be another flag. But look what just happened there. There's still 1 minute for bears to bring this down. But if they now go up, okay, those bears didn't get a full recovery. So there's some kind of a news coming up, I think. I don't know what it is. So now I can put sell orders. It goes up, fills me, comes down, I take profit. Quick scalps. You wait for market to come to you. Others, they see a weak bear close, they will buy. But I don't like to do that because you're going against a very strong. Okay, I rather to put my sell orders up here, get filled as it comes down, and take profit. You're in a bearish leg here. And a much bearish market then, because we are 5 minute is below the 200. So selling is more lucrative than buying. And the bar hasn't really closed. There's, okay, 10 more seconds to see if the bears can actually take out that 10 close. Target is still 51.80. They couldn't, so we're stuck in this limit order. So you got a 3-bar limit order. Is lower third is a buy zone, upper third is a sell zone. Right, they already sold here. They're still trying to come in here. It's a tight, small 1-bar trading range, but it's a triangle. So I don't like to do anything in the apex of the triangle. I'm already too late entering this trade. You got an inside, so you have II. Market's trying to reverse now. But how will this bar close? If bar closes bullish, bulls will buy. That'll be the second entry long. First entry long is an inside bar. First entry close, bull close, and now the bulls are trying for the second time, trying to buy. See, what happened to the 51.80? This right here is you can't sell, okay? If I were to sell, that would have been a scalp. That's it. So if I sold, if I were quick, I would have scalped down here, be done with it, okay? Because this is not getting any follow through. Pullback did not get any follow through. So now we go back to, imagine I had sell orders there, right? So we went, so right here, 80 low is, it was above bar 12, right? So anybody sold here will sell higher. As it comes down, they will make money. Bears disappointed they didn't get their full recovery at the close of 10. They might sell even higher. They want a double top. So there's a one point. Bears more than 1 point they made already by selling above. So that was that limit order I had earlier. I had one there. I had one there. That didn't get filled, but this one got filled. And you already are making money with that. So that was my limit sell. And I had buy orders, I would just put it up there right away and I would just make money. So selling is more lucrative than buying. This bar has to close bullish for me to consider buying and reversal back up. Disappointed bears they came so close to the 10 close, couldn't get their original if they were still selling there, didn't get their break even, so they sell higher, and that's the limit sell and take profit. But it could be just a scalp and exit. If the bar closes bullish, then bulls can actually reverse this back up, but it's kind of difficult. There is oh, maybe it did, so let's see. That order did not fill if you were to put it right there. So you would have canceled it out. But it is a resistance until they break it. So I did say we're going to bounce. It's II, so they are trying to buy. They are trying to close a bull bar. Bears are doing another scalp there. They will exit out if the bar closes bullish. But if it closes bearish, we will continue to come down. Anybody who's selling into 5180 and further down to the moving average, they are selling the pullbacks. So they need a bear body here or a weak bull body closing. Okay, so it closed slightly below its midpoint, but it's not all that strong. And it's a double top. Would have been better if it was a much weaker bear bull body. So I'm not going to sell. This would have been my scalp right there, and I would have been very happy with that scalp. They want to bring market back up to 7 low or 7 close, so they need to close a bull body. And if they start to take out the upper wick of bar 13, then you'll know that they are coming in. Need to close a bull body. And if they start to take out the upper wick of bar 13, then you'll know that they are coming in. If bears take out the 13 open, then we will continue down. But it's very dangerous here. I might have a trade here going long, but I need to see. Just waiting for a little bit more. Okay. Okay, bulls are buying the close now. So did I. I'm looking for a quick scalp here. I'm going to scalp with, I entered with 5 contracts, scalp 1 contract, and I left it for the EMA test. See if we can do that. If it comes down, I'll be losing with a 1 contract. But the moment I see bears, the bar actually coming down to the the close of 13, I will hit exit. And I will not linger in this long because I don't know if it's going to be able to get up there. But they are buying the close, so that's a good sign. So all they have to do now, fill that upper wick of 13 with a bull body, then I will move the stop higher. But if they fail, then I will not do anything, and they can come and get me out of the market, and I would look to sell. But there was a trade there. I waited for bears, but bulls closed the body semi-strong, and that's the second entry, but it's kind of weak, so they have to become more strong. So they have to now close this body somewhere up on the upper part of the bar 13 wick. But if they fail, see how it's coming down? If it fails, that's fine. I'd be losing barely any money with that last contract, and I'd be looking to sell. But right now, I'm looking for bulls to reverse back up. Because it's the low one, failed, right? So it's kind of a double bottom, higher low, and it's going up. So now I'm making money with that runner. There you go. Now I move the stop to break even. And if it does plunge, decides to not go up, fine, I'll just make a couple of, if it's not a 1 point yet, but if this goes up to the high of the wick of 14, I will have a break even plus 1 point. And you can see breakouts fail at the low of the trading range. So there was a potential. I knew there will be bears stuck here. So you sell, scalp, and you're not getting any bear bars, then you can exit and look to buy instead. And I said first entry, closes high, strong buy. So that's your second. Not all that strong, but I see that they're buying the close of 13. I bought it and I scalped quickly and I left the runner. It could go a little bit higher. The target is 99.25, 99.50 area. I did say we're probably going to test bar 7 low or the close. Could get there. We will pull back eventually, but the pullback could be bought. All right, we just test the EMA here. So bears want to sell signal, maybe a bear bar. They could sell that again, but that's some momentum for bulls right there with bar 14 body. If we close a bull bar, bulls will continue to go. They want to test bar 8 high, 3 low, possibly 4 or 5 low. If they close a bar above the EMA, bulls want to close these gaps, but they have to show us. So we need bull closes above the EMA. How does this fail? Well, we could get this sell signal bar at the EMA, and that would be double top. So they're deciding right now. I want to see a bull close here and a follow through into 52,250. 5,200 and a half, or 5,200 and 3/4. I like to see a test. Which is the high? I think it's the high of, yeah, high of bar 8. And if we start to close the, all right, that's good. That's a bull close. If we start to close the gaps here, we're then going to pull up to 5205 area. But first, I want to scalp around bar 8 high and see if I can leave a runner. Second leg up for bulls. Really nice. I want to scalp around 5,200 and a half. Almost there. Bulls want to close the gaps. And that's what happens in trading ranges. Gaps can close. Better if we can close a bull bar here and then open another one, become always in long. What happens if we can't close and suddenly we close a bear bar? That means we get some kind of a double top here, but I doubt it. I think the market wants to close this gap here. So target is still the high of bar 8. And if the bulls actually take out that, that'll be my scalp, and I'm going to leave a runner. To go higher to 5205, 5206 area, or this bar 7 highs. Bar 7 open, bar 7 highs. Wow, it's taking its time. I don't like it. So last 45 seconds. 45 seconds. Just trying to be patient here because it's a trading range. They're trying to close these gaps. Okay. Didn't close bearish, but it also didn't close above the EMA, so that's a problem. But look, the way that the next bar opened. But I don't like the way that the bulls are handling here. Bears are still trying to get a bear bar, but they're probably buyers underneath this bar 16. So it's because they were going towards their target and they're going to buy and they're going to fix and hold a runner. There's nothing to sell here yet. Or for me to exit out. Don't like the bar, but that doesn't mean that I should exit out of my long. I will, however, manage the risk and take out one more contract, green, and leave one. I can always fix one, but I don't want to be in two. I already scalped some. So, okay, so this is kind of promising. Bulls are trying to fill that wick, upper wick, with a bull body. Target is still 5,200 and 3/4. The high of bar 8. But if it fails, I'll be out. Yeah, I'm not very thrilled about what's going on here. I'm worried that we could quickly come down to the bar 10 high if bulls cannot close a bull bar here. Bears trying to get the second sell or low 2. There's no bear bar yet. So you exit now, you could be upset. So you have to see a bear close before you exit. Here's when I come down to the bar 10 high. Some buyers are waiting there underneath bar 15. I'm still holding my long. I haven't exited. This bar is not a bear bar. For buyers underneath as early as 14, I said they're waiting, could be buying. Nothing here that says that I should exit out of my long. But is those bulls upset with the close of bar 16, buying underneath 16? If they don't see this attempt of bulls able to close a bull body at the high of 16, if they don't see it, they will exit. But if the bar closes like that, as high as possible, more bulls could start to enter into the market. But still, it's just, you see, that's not good. But it's still not a bear bar. So just going to give this a one more attempt. Bar 18. There's nothing here says that I should exit out of my long. Bulls need to now take out the 17 high. If they fail and we get a bear bar, I'm going to exit. There might be some buy orders above 17 high. There's kind of a support here, if you notice, right there. So it has to hold. I put a buy stop order there. One of the contracts I scalp. I want to see bulls actually close. So I want to add to my long there. As long as this holds right here, this line. If it doesn't, then I will cancel that order and buy lower and fix. But otherwise, it's support. There's no bear bar. That's why I'm hesitating to exit out of my long. But if they start to close a strong bear bar, then you could say, okay, they started to sell at the EMA. We failed to close several times bull bars above the EMA. Then you can say, okay, I'm going to sell. I'm going to target these areas. Again, you could do that, but it's better to wait for that bear bar. Because what the bulls see here is they want to close this gap. So that was the first sell, 17 failed. Second sell fails here, bulls can take over. That's become very strong. They broke the support. Next, they're trying to test there. And it's a bit of a gap here. If they want to close the gap, that's it. But still buyers down here waiting. So anybody who was still long there didn't want to exit out of their long positions. They will look to buy again. but market could test this high. There's a bit of a gap here. Bulls want to keep that gap open. So if we get a failure with bar 18, okay, bulls can take over again. So some are selling this a really good close. They want to test a bar 10 high. Bulls want a micro double bottom and reverse it back up. Some bulls buying here, they want market to get back up so they can at least halfway so they can actually break even. But the bar closes bullish, that will become a micro double bottom bull flag and a second sell failure at the EMA for bears. So, but the bulls need to step up here. So I bought is with a limit order and fixed one contract, lowered, made money with that. I lowered the buy stop order above bar 18. If bulls now accelerate and take out the 18 high, that will be a bull flag breakout. I will enter with another contract there. And there you go. That's the second entry long. Now for bulls, first entry 17, second entry is above 18. So I'm compounding. Now I want bulls to take out this gap and get up to the 5, 4, and 6 lows. See if they can actually even test 3. See what happened there? Why I didn't sell? You're in a trading range. Trading range is generally tries to close the gaps. So I play with that in mind. So I'm going to scalp another contract and now I have 2 contracts in the market. I'm looking for bulls to accelerate. My target is around 05, 06 area above, 5, 06 area above. I'm trying to make money as quick and as much as I can. And let's see if I can get a bull close here. I might buy that as well. I love it when it does this. So hopefully nobody sold at bar 18. Did anybody sell the bar 18 and now hurting? There was a gap there. It's a flag. You should always look for failures, okay? You got 1, 2, 3, 4, 5 bull bars there, right? So you should always look for failures before selling. Now, anybody sold underneath 17 is or the close of 18 will sell higher, try to break even before market goes higher. It's an expanding triangle now, bull flag with apex, and we close a strong bar. Bulls want to take out this trend line from that level and want to get back to here. Really, they want to get back to there, the 7. Remember I said 7 high climax bar starting point. But we need another bull bar here. Exactly. Trading range, price action, things that look less likely to succeed are more likely to succeed. Well, I now have 1 contract. I don't like the way we only have a 1 bar bull bar close above the EMA, and we need a second one. So I lower the risk. You can always exit or buy again somewhere down here and fix and exit. But I can't do that with multiple contracts. It's just too much hassle. Because this is still 1, 2, 3 wedge bear flag. That's what the bears see. But you're in a trading range. So if the apex of this expanding triangle bull flag does not hold, okay, then I will exit. But exiting with one contract, taking either a small loss or be able to fix it, is much easier than trying to fix something that has higher risk to lose. And that right there is not good. So why is this happening with bar 20? Because bears sold and now they're trying to sell higher. Like I said, they will try to fix it. So I took as much as off the table there, holding, and this gap is still open. So can the bulls now show up here? Well, it's a limit order market here now, right? So there might be some buyers. Bulls went long. Second entry also disappointed, so they're buying there. They want market to go up at least a little bit so they can exit out of that contract. So if you're a bull, bought here, you buy at the open again, right? Now you're trying to fix it. You need to get to here at the minimum. They want actually market to get back to the bar 18 high. They minimize the loss there by buying above 18 high. But if the body doesn't close bullish enough, then they will exit out. It's still a limit order market. It says bear close. So what does that mean? Bull machines will bet against the close of a strong bear bar like 20. Is more bulls will buy, and they're hoping to bring the market back up to the 18 high. I already fixed that trade. So this is the last call for bulls. They either close this bar bullish or I'm exiting out. There you go. Market double bottom, higher low, bull flag still, and the apex is still holding. So back and forth. It needs to close bullish, then we'll get up there and possibly up here very quickly. To cut the inside bar, it's an IOI 18, 19, 20. To cut the inside bar is high, but it's a strong bear bar, so there are sellers waiting is above that 20. So they're selling, okay? But the bar closes bullish, we could get the breakout to upside. Still, the only problem here is we don't have always in long set up yet. We don't have two consecutive bull bars closing above EMA. Bears see a small head and shoulders pattern. They want to close this bar bearish. So there are a lot of scalping here. Buy low, sell high. And a bunch of stock traders are fixing. Bulls see a trading range reversal and they want to close the gaps. So it's more on the bull side than bear side. So bulls really need to show me that they can close bar 21 on its high without failing here. But it's just tough because these bears still holding. They see a bear flag in the larger scheme of things. So they're trying to prevent the gap close and also a close of bull bar. So we get a nice bull bar. We could accelerate very quickly. What if we close a bear bar? Well, there's a small head and shoulders there with a neckline right here. If the bears break this neckline, Bulls will buy with a limit order, retest, and then they will exit, and then bears can come in. But nothing's broken. It's still bull flag. The apex of the triangle is still holding. That's still holding right there. So it's more bullish than bearish. So I'm long. I'm going to put let's see. Let's see if we can accelerate. Okay. So I had a buy order because it's a bull bar. It's above 21. I entered again, compounding. Scalp some around 3 low because it is targets and it's a breakout test. But I'm now holding another runner. And this time I would like to see 5205 area or this measured move target to meet. And it's a conservative one. You can actually measure from here and expect a follow through into that. But I'm conservative because of this gap here. So I'm gonna measure this breakout, pullback, and buy. Let's see if we can get above this 3 low. So I now have 1 contract running. So that means I made money here and I'm managing the risk in the middle of this trading range as best as I can. So the reason why I measured it like this, again, I'm very conservative, is there isn't a good breakout here. There's a bunch of wicks, like here is a buy but failed, came back down, dipped, okay, and then now it's trying to go. So, and then there's also a gap here. This gap sellers are waiting. We might actually reach there and not close the gap entirely, and the bears can show up. So I'm just looking for conservative approach. If we didn't have this many bear bars to the left and we had really strong bull closes, it's just something that I learned in time watching this kind of price action. It happens all the time. If we have these kind of closes, then yeah, I would have measured the whole leg. But you can see it's already having a hard time. It's actually, I would have actually measured probably like this, and that would have been the measured move, or they couldn't even get to that yet. So I'm going to take that. All right, so now I don't like what's happening here, but this is a spike pullback channel for bulls. The channel here is the 50% of the channel. As long as we stay above it, we could go a little bit higher. But I did take a lot of profit here. I only left the runner. I want market to get to the bar 7 open is or high. So I'm holding a runner. I mean, you can even, since this is, you can even take that. Things started to get bad there. So then you see how it aligns well with that target I put in there. So the bulls can still reach there. So I'm still holding this runner. But that upper wick is not good, but it didn't close bearish, so that's good for the bulls. Is bull C, leg 1, pullback, leg 2, pullback, possibly in leg 3 here. Is they have to keep buying. Bear C, 1, 2, 3, wedge top, but where's the bear bar? So I'm expecting a close of this gap is, but it's just not all that strong, but it's getting there. Now is on the 15-minute chart, we are back inside. The key level is if the bulls start to close bull bars above 0650, we could accelerate higher. Here we go. Now all we need to do is to close a bull bar above this line, demolish, and get to the next one. Now all we need to do is to close a bull bar above this line, demolish, and get to the next one. We will eventually pull back to the EMA, but so far I'm holding this long. We might sell somewhere up here. We might come back to the EMA, but we could buy the EMA once again. It was up above, one tick above, right there, 21. I said if market is bullish enough, it will fill that order there, and it's going to test the 3 low. I always one tick above or low. Okay, very good. I'm break-even plus is 1 point on this trade. I cannot lose this trade. It will be, even if it comes down and hits my stop, it'll be a 1 point win is with the runner. Okay. Looks like we had a second attempt to break that 3 low. Still nothing. We need a good buy signal bar at the EMA. I did say that we're probably going to pull back to the EMA. Can markets start to swing here? They see a bear flag here. And it's a strong sell, so market wants to test probably this leg lows once again. But remember, how do we break out to the downside? We have to test the 50% of this trading range, which roughly we are there. And bears need to sell, but there's a gap here, and this gap is going to probably hold. Even if we come down, there will be probably buyers waiting there. So I got kicked out on my long. It actually hit the stop, break-even stop, while I was away from my desk. So I'm flat right now, not by choice, but getting kicked out. So it's okay. That's what the stop is for. Some bulls looking for a good signal bar here. They want a good, maybe in the form of a pin bar, something like this, to continue to go long. So what happened on the daily? How come we couldn't move forward? Well, this whole area is a trap zone, right, from here to here. We don't have, now, in order for example, tomorrow, for us to sell, today needs to close below this. If we do, this is a daily chart. So if we close the daily bar below right here, then the market will continue. We could even accelerate, come all the way down here. But until then, market could reverse back all the way up to here, and even here. Now, I don't know if we're going to get that today. That's that's 50 points away. So that means we have to really accelerate. But we could, however, buy and test this area, maybe close a bull bar. We do that, then tomorrow we go and test right there. maybe even higher. But right now it's still a bear body and it's still trying to come down. So how does this reflect onto the 5-minute chart? We could end up getting a bear flag here. So you got a 1, 2, 3 and a lower high, but we need a bear bar, okay? We need this bar 25 to close bearish. But even then, selling here, we could be stopped right around here. So this is still support. Bulls want good signal bars at the EMA so they can buy and break out and go and test the bar 7 high. It's not clear to me right now, so I'm flat here, looking to see what the market is going to do here. So it's at the EMA, it's bulls bought, and then bought again, but it's bad follow through. So they could be buying at the EMA and fixing. Okay. Bears try to sell again, failed. That's why bulls took over, but they're not doing all that great. So now we made a new high. Say that they bought here, right, after the bears failing second time. Then they bought again. But again, this is not good. We need this is not a good buy signal bar, 25, but it closed on its high. So the limit bulls are buying at the EMA. All the limit bulls need to do now, close 26, above 25 high, and then finally get and test the 23 high and break out and get to here. But what if they don't? Then the bears will try to close a bear bar, and there will be a lot of sellers underneath that bear close wanting market to come down here, and that has not yet set up. So this is more bullish than bearish. If you're long, you should stay in your long. We're going to go test the 52.05 at the minimum, and we could even go further above 52.05. Bulls are giving this a second try to break this breakout test and close a bull bar. Then we're going to find ourselves right here with the attempt of closing this gap. If that fails, we will come all the way down to possibly to 51.95 and further down below. All right, so think of this as sell climax, and then sideways and up. Trading range is if bulls cannot close the gaps, we could continue to come down and test those lows. That's what I was saying. But right now we're doing pretty good. I'm expecting this right here to be tested. And if we fail to close this gap, then I will look for bears. But so far so good. So I'm long, and I'm looking for is 05 to be tested. I'm going to scalp there and leave a runner. Just want to pay myself a little bit. Excellent. Okay, so that's fix it. I call it a fix it event or break even. So the question here is, to fix it, do we need to see the reason for entry or does it happen only because of capital management in bar 20? If I'm not mistaken, you fixed it, but I didn't see the technical reason. So you're long here, right? So was I, but you're getting a lot of fixing. First of all, is bears were fixing, right? So they were stuck here. They might have fixed it right here by selling up there. So if they exited out of the market, you kind of get the idea that not many bears are left in the market because you're getting these strong bull bars. So, but eventually some bears are still in it, so they're looking for a good place like resistance, like from the bar 7 low to the bar 8 high is resistance. They could sell here and then look for look to bring market to come down here, but it's very strong bullish, and we got a gap here. So here's the first bear bar. If anybody sold the close of that bear bar instead of underneath bar 1, they're trying to fix something and they're failing, okay? So they failed again and they sell again at the high and they're trying to fix it, but no follow through bear bars after these bear bars. So I fixed it because I was long and my contract failed, okay, the runner. So what I did there was I saw this bull bar, right? I know this is a limit order market. Their market is going to probably buy, sell the close of that bear bar, bull bar 19, and then buy the close of this bear bar. I put a buy order there and I fixed it with 21. And then it's 21. As I was fixing, it also closed around its midpoint. So I put a buy stop order there to get back in because I saw the no follow through bear bar. If this was a second entry short with bar 20 for bears, bar 21 should have closed bearish, okay? Then we would have come down, right? But it didn't. So bar 21 is telling you this was a fix it by bears, and bulls are scaling in, buying even more, okay, and able to close a bull bar. Then I said, okay, I'm already in it. I'm just going to put a buy order because if bulls are now in the market, they're going to activate that buy order and I'm going to make more money because this is where I want market to go. Although I made money, but unfortunately they couldn't accelerate. So it pulled back. But bar 23 is not a good sell signal bar. Many bears still stuck selling higher, trying to fix it again. They're trying to fix their short trade. But again, they failed. This time, bulls actually trapped the bears underneath that bear body. So what do you think is going to happen? Well, they're going to take out that bear body's high, okay, that candle's high, and probably going to go higher. So they're already buying. You can buy to close, which I did. You can buy above, which I did, and I entered. So I scalped at the 05 a little bit. I'm still holding, but I'm not very happy what the heck is going on here. Bears are still trying to keep this gap open, even if it's a couple of ticks, and that's not good. But if they cannot close a bear bar, we don't need to worry about it. Probably buyers again here. The only problem I see now for bears is that this is becoming a very good strong bear bar. And they see 1, 2, 3. Remember, this is a spike pullback channel with a 3 push top, maybe even, I wouldn't call this 4, but I guess some will. So maybe 1, 2, 3, 4. So that's still a wedge, okay? So bears now want to sell is underneath bar 27. Bulls are stuck up here because they bought probably above 25. They buy again. They're trying to fix their runner. If the bar closes bullish, no bull will exit out of this long, and market could continue to go higher. That could be a small pullback bull trend, could last a couple of hours. So I guess what I'm trying to say is that bears were fixing here, but the bulls were fixing as well. I would have exited out of this fix with bar 21, okay, but it closed bullish. Because it closed bullish and strong enough, okay, that right at the threshold, I decided not to exit, and I see that the bears are exiting. I ended up adding to my long, and I made money. So pullbacks are small, okay, and 1 or 2 bars, but at this point it's just 1 bar. Bulls are buying the close and the low of bear bars, so we're in a small pullback bull trend. So it looks like they're still trying to close this gap. If we close above 52.05, market will definitely test the high of 7. Can we get a new high today? Yeah, it's possible we could. Okay, once we take this out, next target is going to be the magnet or the prior highs. In fact, I think, so that's your, here we go. See, there's a gap here. They closed the bull bar. Put a stop there. That 1R, that's 2R. I think the bulls are going to push towards the 2R. You can see the swing. 25 is okay, buy, signal bar, but it's not all that great. They bought it anyway. It ended up becoming a bear trap. So the bulls are now buying. They want to get to possibly 2R, 3R. We might even make a new high today. That will be the 4R. But there are some sellers up here, so the bulls will start to take profit. I want to see this measured move finished, completed, and then I want more than that. I want actually bulls to give me the 2R right there, which is 11.25, 11. My best entries, and I'll tell you this, are actually around the EMA. I don't care if it's actually in the middle of a trading range or not. If I'm really committed to trade, I love failures at the EMA. Okay, you can tell. Second entries fail, you can buy. Second entries fail for bulls, you can sell. But it's been nothing but a second entry failure for the bears, and the bulls are strong. So you can even extend this measured move, measuring this entire leg, or just from here to here. That's the breakout leg. And I'll do that if that's what you... Okay, so we could even get there, 14.25. That would be 2.5 before coming down. And I totally understand, Sarah, why you were asking for what is midnight. I saw your message about your broker and how it works for you. We were making fun of you, by the way, in case you missed it, because it was such an easy thing to do. But we weren't trying to make fun of you. We're just laughing at the question. It's just too funny. But I understand why you're asking, because of the broker reasons. It's the U.S. midnight. Everything that on our charts, we only look at U.S. time, Eastern time. So you have to adjust your charts accordingly. I'm not talking about Pacific or London or EU or any other Asia. It's always Eastern time, New York. Because that's where I'm located, so that's the time zone I trade in. There was nothing to short here. It was nothing but a fix-it event by bears, and they finally exit out of the market. So, but the bulls still haven't really closed this gap successfully. So we just need to wait for these bulls to complete the objective. But we could still get this. So be careful here, right? There's a gap here. There's a gap here. So even though we could go and close this gap, see right here, bulls are trying to run stops. You see that right there? These two highs. They're trying to run. And market makers can collect some stops and then start the sell down. They need to fuel their move, okay? So they have to trap traders. They already trapped some traders here. Now they could go and run some stops and then start to sell. So it doesn't mean that we're going to make a new high today. But so far so good. My target is still either the high of bar 7 or the open of bar 7. We are almost there. I'd like to see a follow through. So here's my first measured move, conservative target, and I like to see a little bit more and get this target, that's 2R, and the actual measured move of leg 2, which is the breakout leg. Okay, breakout leg. That's 1350. All right. Very good. Very good move by bulls. So if the bears actually if the bulls were unsuccessful of closing that gap, bears could have showed up earlier, like around here. So bears had their chance to sell, but they failed right here. So what do you think is happening? They're trying to close this gap and test this equal highs, 3 high and a 6 high. So that's where they're trying to run to. In that process, we could get that 2R and then start taking profit, and we could come back down. But at the EMA, there could be buyers, and we could bounce again. So bears kind of lost their chance selling here, is retesting. Remember I said, if we cannot close this gap, we're going to come down and test this low. And this is the chart I had in mind, but that never happened. So it's more bullish than bearish. We're not having deep pullbacks, but even then they actually end up buying. But we now have a gap here. So we're so close. The first target, buying the pullbacks, trapping the bears at the EMA. First trap, second trap, ended up making a new high, coming back down, bouncing, but there's a gap bar. Now bulls cannot close that gap, and that ends up becoming sell and get to the midpoint, okay, or the open of the day, and then bounce from open of the day. But so far so good for bulls. Small pullback bull trend, accelerating. Is this target met? So good job bears. I'm going to clean this up. So is this one also met? That was a conservative measured move. Now I have the breakout leg measured move target 1350, and the 2R 11 or 1125 is next. Wow, okay. Just wants to get there very fast. We would not argue with that, would we? That's the 2R. Is also about to run some stops above this lower high. Okay, bears are panicking. Strong bears have their stops are there. So they will try to sell into this profit taking at the 2R to prevent the bulls from taking out that lower high. But when market takes out certain lower highs, especially is major ones, that's not good for the bears. So how many of you actually made money here? And both the pullback, that's another flag, or exited. Or how many of you sold and stuck and hurting? If you sold a bar or under or the close, okay, you sell, okay, maybe, I don't know, 5 points above. Here's 5 points. Okay, I don't know. You did not make you minimize the loss maybe, but that's not good. Or if you have maybe sold this bar, sold underneath 23, and then sold 5 points above. Where is that 5? Right there. Right, you enter, then you exit out. You exit out right there. And if you have an exit out there, then you are punished. And there's nothing I could do about that because we were long into your stops. This is great. So we got that target. Here is the breakout leg target right there. It's 1350. Go Bulls. I mean, we could make a new high today, but there's a little bit of gap here. Bears will try to defend it. There it is. Almost. Almost doesn't count. That's it. That measured move is done. You guys should be making a lot of money here. Now take some profits because this is a one strong bull bar, the biggest bull bar since bar 11. Okay, it's vacuuming up to the trading range high, but it could be also owned by the bears. It's vacuuming, is trying to get back to the bar one open and high. That's the 3R. There will be a lot of profit taking at 3R. I recommend you to start getting paid right around there. We could come back with a couple of legs because there are a ton of bears stuck here. Okay, even here, they're stuck and they have not fixed anything, possibly. So we could move somewhere here only to buy again. Okay, so 3R is important. We're almost there. It's the biggest bar. A bar like that will get follow through. Even if it's small. There's some kind of a news just came out. Oh, Fed Collins started to speak, but a bar like this should get follow through, at least a little bit. 3R is your target, but I've already taken profit. This could come down. Buyers will buy. Okay, somewhere in the middle or lower, but this should get follow through a little bit more. This is the target. Magnet is the target. Feds are speaking about the inflation and these cuts and all that. Fed Collins is speaking. What a great day. Market could push higher. We could actually get to 52.2175, 52.22 area. But we're going to pull back at least a little bit. So I would either pay yourself here and leave a runner, or is at least move your stop somewhere. If suddenly this reverses, you don't lose too much. Since no one is scheduled after me, but I'm gonna double check because don't wanna. I think I'm alone today. All alone. Am I? Okay. So I'm gonna open the question box here. It's on the GoToWebinar. If I have skipped your Discord questions, please do post here. But keep it short, please, because my battery is dying. My internal battery. All right, so question box is open. No questions. I'll keep waiting. Oh, okay. So 2 came in already. Let's see. If I'm long a small position on the close of 13, should I add on the close of 14 or take profit? Well, let's dissect. I think I have already dissected this, but I'd be happy to talk about it again. Let me get rid of this first of all. So, if you are long on 13 close, Why would you be long on the 13 close? What have you seen there that was happening? Can you type that up? Okay, maybe I can answer it. I know it's kind of difficult to type it up in here. Oh, you did. Oh, thank you. I thought the bears were trying to exit break even. That's very good. Yep, that's the answer I was looking for. And that's exactly what we said. Even though this is a phenomenal close by bulls, but you have really strong bear bars and follow through breakout. This is also breakout is pullback. Bears will sell. Okay, but that's probably it's a bad breakout and they're trying to fix it. So they come very close to the close of bar is 10, but they cannot tag it. So what happens? They sell even higher, more, okay? So it opened here, right? Came down, went back up. They sold again, came back down. Some bears exited there. Is quickly possible. But problem here is that that's because they probably had sell orders there. Remember, I had sell orders here. I was trying because I knew they were going to fix so I could actually sell with them and scalp. But bar 13 closed bullish. So all those bears stop now in their tracks. They're like, okay, this is it. We cannot fix it. So we can't fix it or fixed it. We're out. We got to make that money back now. So what do? They see a strong bull bar and they buy it. And look, we have a gap open with bar 14. So what happens when a gap? So this is my follow through question, Adrian. What happens when it's at the lows reversal? You get a gap bull open. What do you expect for bulls to do? This is part of the course teachings. Al actually talks about how to trade because your answer to your question, do I take profit with bar 14, is in that answer. Can you answer it? What do you expect market to do at the lows? You get a gap open like that. You expect a couple of legs up by bulls. I mean, I don't know anything about the measured move, but yeah, you can measure something perhaps. You can measure maybe from here to there and project it up, right? So that would be my face measurement. I mean, that would be my conservative measurement. So right there. Okay, so that would be the measurement. But what I'm trying to say is that you would have leg one, and possibly they will buy the first bear bar they see and expect a second leg. Look, that's leg one, pull back, leg two, pull back, even leg three, and a swing. So they didn't let go. So to answer your question, do you exit? No. And say you didn't know anything about it, but you saw this bar. What is this bar? This is a momentum bar. Anytime bulls are actually taking out a significant amount of an upper wick and then closing a bull bar like that, you should be looking to buy, not looking to exit or sell. Okay, that's a momentum that's probably going to at least tag some kind of a resistance, okay, or key price level. That could be your resistance is here or the EMA, and they did test, and that's when they started to take profit. So at least hold it until into this area and then take profits. Now, taking profit does not produce any bears, so the bulls are now looking for another couple of legs up. Okay, so that's what you would do. Next question. How do you measure runners from climactic bars risking a pullback, raising most of its profits versus entering back after a pullback? Can you give me a bar number, Yen? Well, let's find out. Okay, so they're asking, how do you manage a runner from a climactic bar? I guess what I'm not understanding is that you're buying against the climactic bar, and you're in a long position buying a bear climactic bar, and you are in. Oh, okay. So you just did. If I see 27, is this related? 27 is naturally. I think of a wedge breakout. That's the second question, or related? I'm assuming that's not related. So I'm going to focus on is your question here. So yeah. So I'm going to answer this in two ways, okay? Because I'm not understanding your question. So here's is climactic bar, and they sold it. How do you manage a runner? Well, your stop is here. First it was here, right? Maybe you sold this, and then you sell this, right? It's a very strong trend bar. Probably it's going to get a leg or two. So we took out that structure, and then this structure. Now you can take that stop and put above that higher, lower high, right? So, and you can eventually measure some kind of a measured move target to the downside. So basically, how are you, if you're selling, okay, how are you managing the stop? You're moving it, right? So we check that out. You can move it now above here. You don't have to put it there. So it comes down more and more and more. Now we're taking out these, right? Taking out those. But where's the follow through? Suddenly we get a bull bar. Many of these bears will trail that stop further down, either leave it there, okay, or here, or they see a bull bar, they will exit above it very quickly, right? So some did sell and got a little bit better price to exit, lower than higher, but they did. So eventually some of those bears didn't move didn't exit out with 11, sold higher, maybe their stop is there, right? The last break of a decent structure, they put a stop there. They sell higher, they get a better price and exit, but they will eventually exit. If you don't exit, then you have to trail that stop. You do not want to let it go against you like that and give most of your, winnings. Now, is the next question. If the question was, if I'm buying against the climactic bar, and I'm making this up because I'm not sure if he's actually asking for it. If I'm buying against, I'm going to swing long. If I'm buying against these, how do I manage my stop? Well, if you're in a trading range, bulls will try to close those gaps. That's how it works, right? So it's most likely climactic bar, if there's a lower high, there are stops there, right? So bulls are buying into those stops probably. But first they have to prove to the rest of the world, the market, that they can close the gaps. If you see the bull bear gaps are being closed, then what you do is you don't need to worry about having a stop all the way down here. Again, you can move it underneath these higher lows, higher low, right? So now we close that gap with bar 29. I'm going to buy above that, and I can just put my stop there. It would be kind of an overkill. You shouldn't. You can put it underneath somewhere, or maybe underneath EMA, trail it with the EMA. But at this point, the gap is closed, and it's a really good bull bar. Chances are there are buy stop orders above that bar. And it was so many buy stop orders there. Look at the bar. Many bears exited, or they're exiting with fear that the gap is closed. They do not want their stops to be hit. When they exit, you get these big bull bars, okay? So having a tight stop, so you're safe. But that's if you're asking how you manage your stop, if you are bullish against the climactic. So I don't know if I answered your question. Hopefully I did and didn't confuse you any further. Next question. It's about bar 6 before the second leg down. What was the best way to short it? At the close or below the low of the bar? Is bar 6. Let's take a look. All right, so we talked about this, right? So what was happening here? I said I don't want to buy it because bar 5 did not tag below this. So what the market is doing, they're actually trying to trap you, showing you two bull bars. And a lot of people are buying this, hoping to bring market back up to these highs again. But the one thing that you are a smart trader, you know that, okay, anybody who's selling, they have sell stops here. They're going to trail. They see, look, they didn't get trapped. Bears are not trapped there. So all this is actually market makers are trying to trap you. So this area is a pause after a leg, right? This is actually an institutional area. Institutions are adding to their winning positions, looking for another leg down. So they're really trying to trap each other, okay, not you and me. So basically, you can do two things. You can look for a double top, okay, and sell under the bear bar, or you can start to trail sell stop orders starting underneath bar 3. That, and finally you put it there, and this bar fills you. If you are not so sure because this gap is still open and you don't know what to do, say this bar also closed bullish. What would you do? Well, if that bar were to close bullish, then we would have gone up here. Maybe even made a new high, double top, and then sell. But it didn't. But even if it did, and then you get this bar, you could just sell the close or that right away. But we didn't get a momentum third bullish bar with bar 6. You can simply sell it one tick underneath. Some will sell the close of that bar. They're not going to wait. Limit order buy sellers will probably, look, from here to here, okay, since we have a new high with bar 3 kind of breached. I'm trying to, here. They know that this is resistance, okay? In this area, they're going to lace this area here, here, here. As market goes, look, one tick above bar 3, those sell orders got activated with limit orders. So those guys got a really good entry with a stop here. So if you are bear and you enter here, your stop is here, that's your 1-to-1. Now you got more bear bars. You should be looking for 2-to-1. That's another bear bar closed below 2-to-1. You should be selling more. You should be looking for a 3-to-1. We closed below the 3-to-1, right? So here, maybe you sold right there. You closed below the 3-to-1, but there's no follow through. Now is the time to exit out. 3-to-1 is important. It's also the bottom of the trading range, right? There has to be some profit taking. And that's how you expand measure. Or you can just simply look for a measured move target. Doesn't matter. And that's a measured move target. We did not close a bear body below 84. I said 84, you should take profit. And we just went up. Okay, so that's how you enter. This is bear flag. Strong leg down, breakout, follow through. No one's going to sell at the EMA. Look for a pullback. Find your resistance. Normally the resistance was here. If you didn't see this, the resistance was from the high of 2 to the low of 1. Okay, so they're going to lace this area. I generally do this. I put a sell order, sell order, sell order. So these you cancel out, you're in. And then you see a bear, add another one. Or sell that, or sell under. And you're going to make money. Stop entries. Yeah, so I think that's the first. You can sell here, but there's not much of a room here. So, and overlapping bars, this would not be my stop entry underneath 2. Could be too dangerous with a deep pullback, okay, because of this resistance right here. When the bar 1 and 2 overlaps that much, even though the momentum is to the downside, I don't like to sell underneath too, because I know there will be some profit taking coming up, so there's not much of a room. Better to sell maybe underneath 1, so, but that would be a limit entry. Then this would go up, right, fill you, and then on the way down closes lower. You can sell underneath 7, even though this is a buy zone, but it's very strong. It should come down more. And what else? So 9, I don't know, I would probably sell under 8, but not 9. 9, they're taking profits because this whole area is support. So if you sell underneath, I mean, I don't know, it's dangerous. But you got to follow through, but look what happened. Immediately reversed back up. There were already buyers there underneath this, okay? And you can see some bears are already taking profit or some buy orders are hit. And if anybody is long there, disappointed, will buy lower, and then they start to make money. For bulls, is small trading range here, overlapping bars, breakout. There's not much going on here. It's just, it's reaching the EMA, so there's not much of a room there. But if you do buy, because you see here a gap open, but you're buying inside into this resistance, so I probably wouldn't do that. It goes sideways because you're in a flag situation. Double bottom, goes up, comes back to the midpoint, double bottom, goes up, comes back to the midpoint, and then breaks out. But it's still not good, strong breakouts. I'm looking for a good breakout. Okay, so here's a breakout. But still you're in some kind of a trading range. If you buy above it, I bought above here. I bought above here with stop orders. But I ended up scalping, leaving a runner, and the runner wasn't working, so I was keep buying the limit orders at the EMA to fix it. Eventually, it turned into a swing. If you buy here, that's great because this is semi-okay buy signal. Is also 1, 2. Now you have a new high down, first entry long, second entry long. That's a much better buy stop. Definitely the best buy stop ever, 29. It's okay, it's gapped up, but it's not all that gapped up from EMA, so I would definitely buy above 29. And I'm looking for prior highs or open of the day tick price to be tagged. So it's big bar, I would take profit. I said I wouldn't buy above bar 30. It's just too big of a bar. Probably wants to get follow through, even if it pulls back. Problem here is that's the biggest bar in, and you're buying into the trading range high. So big down, big up confusion. We might need to come back down. If we make a double top here, look for a good sell signal bar and a second entry short. That will be the neckline. Look for bears to take out that neckline, pull back, and then sell into EMA, maybe underneath the EMA, but then there will be trap, and then we go back up again. What if we just take out now? Can we take out the highs? Yeah, they're still trying to get there. We might actually get above the moving average, right? But it's a trading range, so there are probably sellers up there. Remember, this is an inside, outside, inside, and even if we breach this outside bar, bear bar on the hourly, somewhere around here, sellers waiting. We're going to go there. We're going to come back down. If we get more buyers, then that's great. You can buy again. Okay? That's what's happening there. Bulls failed. Get rid of those. So it's nothing breaking out. So what did I say? Market could go in and continue to go higher. So the next, I think we want to test this day's high. So that means target magnet is yesterday's high. And breach the yesterday's high, we could actually get the 52.30, 31 area. I don't know, we'll see. right now. Here is your 3R. We just failed again, one tick. Come on, one more. If bulls close above that 3R, we're going to get the 4R. We might get 5R, which I don't have. We're going to go test the high of yesterday. We could go beyond that even before coming down. Okay, so market is still pushing. Good job, bulls. So it's high one, it pulled back. We might need to come down more before we get a high two, but we made a new high now, so bar 35 went above that high, one tick. So we come down, that's going to be high one, maybe high two. I would look to buy the high two. But what if we make a double top here? Well, I don't have a good sell signal bar. There's nothing to sell just yet. And I don't know if this is okay to trap here. Let me take a look. This is still a trading range, so we're at the trading range highs. Your trading range highs. From there, I might even take that. So we're in the resistance. And now the trading range lows. I might take this. Connect those. So resistance here, but is this good enough to sell? You have to wait for bar to close. If it closes, some will say, yeah, we went over one tick, but still this can be a second entry sell. It's not all that significant. So this was the first sell. If this bar closes 36, very strongly bearish, there could be sellers underneath and the bulls can finally exit. We're kind of at the resistance here. But I don't know how the bar is going to close. If it doesn't close bearish, then we're going to keep going higher. We're going to test the hourly EMA. Okay, that means you see this right here, and I'll tell you exactly where it can go. It's an inside, outside, inside, outside bar. What I do is, if I really want to pinpoint where the sellers are waiting, from here to that gold line, this is a trap zone. Okay, we just tested the trap zone for the first time. Sell orders are activated there. Now, can this come down further? I don't know. How many minutes left? Only 2 minutes left. If the bulls can actually close that bar on its side, we could still go with the next hour. We could test that hour's high. We could go all the way up here, this right here, 24.92. So make that 24.75 or 25. We could test there with the next hour and then come down. So I don't know where this is going to close, but bulls can still continue with the next hour. They can continue to go higher and test the outside bars high, go a little bit higher as everybody is buying. We test it and then it starts to come down. We're having the first reaction to the trap zone, but that doesn't mean that it's going to sell. So we could get the breakout instead. Go up a little bit and then come down. And then the next hour, so it could do this. Go up, come back down, then the bulls show up. This would be my target. For more bulls, okay, we can even go up here today. Remember I said 52.50 area we might test, but that was only, and I said it's like a 50 points away. But first, this hour needs to close higher. There's not much time left. Or the next hour we'll go and test its high. And then in the meantime, test this hour's high. Then it's going to start to come down. If we can use this area as support, rest of the afternoon, we could go and test this area. On the 5 minutes, we're at the top of a trading range. So I did say, remember, this bar is vacuuming, but it could be owned by the bears, not bulls. So what does that mean? That means they're trying to trick you into buy, okay, only to reverse it back down. So look what just happened here. So we have a double top neckline. Bears actually broke that neckline with a strong bear body. They can sell now, test right around here or the breakout point. As everybody else is selling, we could go right back up, okay, because there are bulls stuck there. Then if there's a gap here, then you can look for a bear flag and sell. Otherwise, bulls will try to defy, okay, the bears here and try to go back up. So there are bulls stuck here. I like to see bears sell a little bit more because they have the right to do that because they broke that neckline. But they're selling, they know that they're selling into bull breakout and a gap. They know that there are stuck bulls here. They'll probably see a trading range, so they're going to buy the close of a strong bear close to bet against and fix it. So you are a bull and you see maybe you bought above there. You buy again. Your break even is right there. So you're desperately hoping to minimize the loss by hitting that dashed blue line. But bears did one thing there that kind of gives them the authority, is that taking out the neckline with a bear close, which is bar 36 close. So they're not going to let go easily. So they want to bring market down to the EIA. So if you're buying here, you're desperate and you want market to get to that. So maybe you bought one tick above. That would be 1550, you will get filled. And that's your break even right there. So one question is asked here is any tips on stops? I take good trades, but I lose on trades that I don't exit. If I could manage the stop side, it would be awesome. Do you have a few tips? Well, tip number one, you have to go watch the videos. Do you have, I assume you have the course. So we have how to manage risk and hold on, let me open that up. Course. So we have how to manage risk and hold on, let me open that up. First, I would go and watch Al and his instructions on how to use the stops, right? So it's the most important thing. Hold on. So you have to go to the how to trade prerequisite, and right here, this is the module. And understand first protective stops, right? Protective stops, watch these, how to place them. Then understand with actual risk, initial risk, actual risk, which is part of the protective stops. And then you measure your actual risk, and then you can move your stop accordingly, right? So that you have to practice. You know how many times my stop got hit here and I kept entering the trade because I'm bullish bias? You're going to get that because I'm in a limit order market area. Market is going to go back and forth before breaking out. So if market turns into stop order market and you get good bull bars, then you know you can have a white stop, right? So you can enter in and you can trail that stop as the bull bars take out the prior highs, close the gaps, right? So first you have to figure out where your initial stop goes, and then your actual risk, and then where stop can go then. So study these first, and then go back to charts and start measuring and see where you can put your stop. Like for example, ears. If I wanted to enter, which I did here, I bought with bar 13 close. My stop was not here. I did not put my stop there. My stop was wide. It was wide. So once I start to see bulls, then I took that stop, put it underneath 13 because I bought that. Okay. Then I see gap is closed and another bull bar, right? And bulls are going. So now I have a new higher low. So I put it there. As we're taking these highs with bull bodies, I can then use these stops, right? But I got hit here because I tightened my stop too fast, but I entered eventually again. But if you don't want to go into, getting your stop hit, then use the white stop, wait for bull bars taking out these highs, like bar 28, like bar 28, I'm sorry, I meant to say 26, 28, 29, then you utilize this higher lows, okay? Like here is, you cannot put your stop underneath 37. They can come and get you with the second leg down, okay? So you should have a wider stop. Because when it comes down, you can buy and fix the trade again. So watch those videos over and over until, okay, you get a good understanding. You were getting bullish in that tight trading range before we broke out. Was it because we stayed above 50% of the expanding triangle, bar 16 to bar 25 area? Yes, you're absolutely right. There's one thing that the bears are, I just want to point out, bulls are failing to do is tagging that area. But we could still go higher, by the way. But let me get this out of the way. Let me get that out of the way. So here, what do we have here? So I've got a spike and I got a pullback with bar 18, right? So I have back with bar 18, right? So I have and that's the apex of the triangle roughly, right? Something like that. So the apex, I would take the bodies, not the wicks. So that's the apex. Do you see? Okay, we did go back and forth, but we need at least two touch. I need 3 touches. So here's 1, 2, 3 touches, right? And 1, 2, 3 touches. We're gonna get a breakout. Now, where are we? Are we under the EMA? I'm sorry, are we under the apex of the triangle? No. We tried, but it failed, and the bulls buying. So that means bears are failing to sell, and they got trapped right there if they actually sold 24 close or under, or even underneath 23, they got trapped. So you can buy. I bought it, and I'm looking for this trend line to be broken with a bull body. So some will wait until the confirmation of bar 29 breaking it, and then they will buy. But that would be too late to enter. It doesn't matter. You can enter. You can put your stop here, there. So let's see what they made there. So if you entered 1 tick above or the close, say close you bought, put your stop there. That's a 1R. Just about. Yeah. And what I do is I enter small, because if things don't go my way, I'm not going to add, right? I don't want to fix it. I'd be happy to go the other way, but once I start to see bull closes, I'm going to keep adding and adding. So the idea is to get in as early as possible with a smaller risk. If I enter here, the risk is big, so I'm probably going to get my 1R, but risk is big. So if I enter here, I have a bad probability, but still risk is small. I can start small, right? Maybe 1 contract. And if another bar closes, I'll add another one. Ooh, this is really nice. I'll add more. As this goes up, this is going up, I'm scalping and moving the stop. and eventually is I will leave only one contract in the market if I still think that market wants to go higher. So hard to convince myself to keep my long position with all the big tails, bar 21, 22, 23. So I entered up closing with small profits. I was afraid it will come down. I'm too scared when I see big tails. We all do. You're not alone in this. Big tails mean two things. Either it's taking profit, already started to take profits, or it's hitting some resistance, and there are limit orders, sell orders are being hit, and market is quickly taking profits. So yeah, it's possible that everybody gets nervous about that. But look at the overall market. So you did say 21, 22, 23. So bar 21, 22 is 23. But that's a flag though, isn't it? I mean, the flag, what is flag? Flag is basically a trap, right? But who's getting trapped? If it's a bullish flag, it's bear traps down here. Okay, so when bear bodies close strong, but that doesn't mean that those are designed for you to sell so they can trap you. Okay, and bear traps are this, right? So you have traps right there, right? So you want to see traps, like for example here, right? They try to close bull bars. Those are designed to enter you into a long trade right before they trap you. So you want to look at these and get comfortable with those, right? But why would you be scared of these when you are actually in this? And it's, look, if you put a line in that channel, this is a bull flag, right? That's the 50%. Where is the market? It's closing bull bars above the 50%. 50%, it's closing bull bars. Yes, this is happening. It's because why? We have a gap here, that's why. But there's a gap here, there's a bull gap here. So this is a bull flag. And the bear bars that are closing so strong, are they getting any follow through? No. So don't be afraid of these, right? Don't be afraid of those. These are where the bulls are positioning themselves to get a breakout, right? If you're worried, don't enter. Wait for a bull bar to squeeze out of this trading range, which is bar 25, and buy either the close or one tick above. And you get this bar, we're already squeezed out, so we're doing great. Buy more. Don't worry about this, okay? That's just a pullback. That's just the last attempt after the squeeze, bear squeeze. We squeezed out the bears. They're selling higher to break even. If there's no bear bar after 27, you don't need to worry about it. And we didn't get it. And I actually warned you guys that we may not get that bear bar. And the bulls got it. I actually ended up buying. I put a buy order there and there, and I kept buying. So and I was actually flat. I had to enter again because it was so like give me kind of setup that bears failed and exit out of the market. Now we're getting a breakout buy to close. So you should not be worried about this. Just determine what kind of situation you're in, right? This is beautiful legs down, but failed. Failed breakouts. It's done. It's trading range. So we're reversing. This is the gap. Everybody's buying. Strong bear closes are not doing anything. Okay? They're always telling you. And now, this is a flag. So, don't worry about those wicks. If this was a bear flag, then you should worry about those wicks because those wicks are basically the sign that it's a double top bear flag, right? So that means you see strong bull closes, you can sell those bull closes instead of selling underneath them. So in a bull flag, you see strong bear closes, you can buy those bear closes and you would make money with a much smaller stop. You know what it is? It's really a matter of getting used to it. If you actually test this out several times, you'll never forget it. And you were like, I'm buying that bear bar. I'm buying that bear bar. I'm buying that bear bar. I'm selling that bull bar. I'm selling that bull bar. Instead of selling down here, I'm going to sell, okay, the close of those bull bars, because you know this is a bear flag. Like this right here. They sold a close. Why? This is strong bear. Probably trying to make a bear flag. But where are the wicks? There are no wicks. But there's a double top. All right? So, how about the bulls? Look, there's a small bull flag right there. Right? They buy that strong bear body as early as possible instead of buying there. And then they add another contract, so now they're compounding. So determine what kind of conditions, like here is, right, this was a one big bear flag eventually, right? So how do you sell? Some try to sell that close, but it failed. You should have never sold that close. Why? Because look, if this was a bear flag, a bar like this could have gotten a follow through. Not getting a follow through and then getting this bull bar, what do you think is going to happen? That's those bears, okay, actually selling higher, breaking even before bulls show up. So bulls are buying those strong bear bars, bear bar closes. Why? Because this is a bull flag, probably going to get another bull flag before reversing back down in 90 minutes after the open. Same here, look, right here. Small gap here. So what do you think the bulls are going to do? They're going to buy strong bear closes because they're looking for small, that's an implied flag. So they're looking for flags. See, bears are not able to take out these strong bull closes, but they're closing strong bear bodies. Bulls are buying anyway. So what you can do, if you don't want to buy those and you're not so sure, then trail your buy stop order above those bars, and eventually you get entered and make lightning speed money. Determine what you are. Like here is strong bar. Oh my God, the wick bar 73. Who cares? This is going to create a bull flag. The strongest bull bar. Just buy it. Buy it. So if they print another bear bar, you can buy there, fix it and exit. But there's no bear bar, second bear bar, so they're buying. Decide what you are in, what kind of conditions you're in, and then practice it. That's how you enter fast. Like there's a gap bar here, okay? So what do I do here? Because of this gap bar, right, we are in a trading range, but some bears, because they see 1, 2, 3, and a gap bar, they see this as a bear flag. So bulls see a bull flag. But look, they kept buying these bear closes, but nothing, no buy to close. Look, bear closes, that's buy to close, buy to close, buy to close. But there's nothing there. So what's going on here? Bulls try to make money but fail. This is how you exit out. That's because these bears looking for a bear flag. Now you can say, I'm not going higher. What do I do? Exit out. Exit and sell. You're probably going to make money. If the bull flag you bought these small bear bodies, not making a follow through or printing follow through bull bars, only 1 or 2, and failing, time to exit and then go the other way. Because chances are you bought into a bear flag, but it hasn't really decided. But look, strong gap, strong bear bodies, but they're buying. And they get a breakout, and then they buy that one too. Look how strong that body is. They bought it anyway, because that's a bull flag, bull flag. I count about 3 bull flags or 3 bear flags before reversal, before I look for a reversal. Okay, so, wow, so many questions. Okay, so Wow, so many questions. Give me a second. This guy is like screaming into my ear. Financial juice. Okay. We're in a trading range, even on the 15-minute charts. Remember what I said on the hourly, we're probably going to go higher. So don't sell anything. They're going to buy. They want to test above that outside bar. We might actually end up testing right here, 25, 52.25 or 24.75 area before coming down. So we might actually test this area before coming down. So it's still trying to make its way up. So what is this? It's a bull flag. It's a form of a bull flag. They bought a very strong bear body and they're making money, even in a condition like this. Oh yeah, there's the 1 o'clock. Oh, well, might as well. I'll just stick around and see what happens with the. This could turn into some kind of a reversal, by the way. Be careful. We made a new we made a new low and a new high. Suddenly we could actually come down. Watch out. So if we cannot get above this, okay, we could actually trap the bulls here. Be careful. This could be the final flag. But it's news. I don't know. We could get above it and start to break this resistance and then go all the way up here and trap the bulls there and then come down. Remember, I said I want to see market get up here today, and this is where I want to trap the bulls and then swing down. We could get there, and 1 o'clock is in 7 minutes. That's the that could be the catalyst. I think I have answered. Carlos, I got your message about a small account, but I didn't get a chance to reply to you. Unfortunately, I get way too many questions on Discord. The list goes, that list never, I mean, it's just, I'm scared to look at it sometimes. It just gets on and on and on. It keeps adding. I'm trying to answer the questions, but sometimes I just abuse my own time and sit here, answer questions. My half day turns into a full day. I will get back to you on that, about your small account challenge and your questions. I will get back to you. I'll write back, okay? I just don't want to answer here. But yeah, I'm going to go walk for a couple of minutes right before 1 o'clock. I'll be right back. Okay, so just give me 2 seconds. Just to walk it off a little bit. I've been sitting here. And then I want to see what the market is going to do at 1 o'clock event. Bulls are still trying to get to 52.2350. That's a 40 point. But we don't need to stop there. We can actually go 5 to 10 points above, test these highs, and then trap the bulls and come down. I don't know. So that is 24.75. We could go 24.75. I mean, it's not all that far. It's just right there. We could test this area quickly and then come down. Okay? Or they're going to start to sell. We're going to come down here. We're going to trap the bears, and then we're going to go back up again, and then come down. So that would be that trap and sell. Come back to the 50% or underneath the EMA. I don't know. It's big down, big up confusion. Market needs to trap bulls if they want to sell. I don't think it's a good place to do that right here. I think we're going to go up and test this area, and then we can just go up a little bit and then trap and come down. So high of yesterday is also magnet, right? This is still resistance. I'm going to walk off just for a couple of minutes and be right back before 1 p.m. All right, about 50 seconds left. Okay, where is it? Where is the breakout? Or down? This is stellar price action. News. What did I walk this up for? What did I walk for? I don't know why I walked. I could just sit here. I know, me too. I thought something big was gonna. Well, let's just wait. It's still the resistance. It's wedge top, so but we didn't really test. I mean, it's too bullish. I don't want to sell anything here. There's still room to upsides for bulls. We could come down and test 1250, or we're just going to break out now. Target is still, well, okay. All right, finally. Okay. I was just saying we could just come down and test 1250. We already tested. If we don't close a bear bar, we're not going to come down to 0950 or 0850. We could go right back up. If this bar closes bullish or continues to become bullish, target is 2350, not just 23. Actually, I'm long. I'm sorry, I am wrong there. That should be 2350. But of course, I can't select it. This area bulls could get to, but we need to get a bull bar. There we go. Wow, my micro. I actually entered it with micro, my bunch of micros, so it's doing pretty good. So for the micros, I'm looking for 2175 to be tested at the minimum. Let's see if we can go higher than that. Wow, that was insane. I love it. I'm so glad. But get ready, we could actually trap the traders, bulls here, is because all we have to do just go above this, and it could, because this is a one big trading range. Now is we could go up and then come back down. Okay, but can we get more buyers? I don't know, we might, but expect some trapping. So I already taken profit with the micro. Is this could go up a little bit more, but be careful, it's news. A bar like this should get follow through. Remember what I said on the hourly? I said do not sell because we are going to test this. Did we just do that? Yes. Can we come down? I don't know. This could continue to go up to here. This is the next target. So we could actually get there and then start to come down. That will be the trap perhaps. But be prepared. This could also come down here. This hour has still 24 minutes and 20 seconds. But you should have paid yourself right there, which I did. Now, it could get follow through. Bar has still longevity. So the next target would be 29.50 or 29.25. So, and that would be the good trap area as we take out that high. Did anybody make money here? I'm going to end the session shortly. I'm just curious, did anybody actually buy into here? They're getting a lot more for what they're bargained for, which is great. Wow, beautiful. That's the measured move. 28.25. I'd say take some profits, leave a runner. Excellent, excellent. Very excited. I am done with my session, everyone. So you all have a great day. Tomorrow is going to be, I don't know what tomorrow is. Oh yeah, tomorrow is going to be some stouts, and I'm in the afternoon. I thought it was Brad, but apparently it's me. So I will close the week, and then is on Monday. It's going to be Tim Stouts in the morning and Al Brooks in the afternoon, noon to 2 o'clock. And then I come back on the 16th with Brad. Okay. Bye, everybody. Okay, we just reached target. Can it go further up? I don't know. It could. Daily is still trying to go further up, but we have to pull back. I'm worried that we're going to end up pulling back. So this is so far so good. Wow, okay. So they want to keep going. All right. But resistance above. I mean, I paid myself more, but I'm worried about suddenly trapping the bulls here. So I would be very careful here. So you should be in a runner with stop moved up. Okay.